𝗓𝗏𝗋 Canadian Mortgage Weekly Live, podcast with 𝗪𝗏𝗘, Canada's only weekly mortgage video news podcast. And today we're talking about purchase plus improvements and what that is. Let's get right into it. Purchase plus improvements is an amazing program if you're looking to get extra money added to your mortgage for your renovation costs. Have you ever had a home inspection, for example, on that home you love, and the home inspector says, hey, you know what? This is a really good house, but it needs a brand new roof within the next year, or else your home's going to start leaking. Or the furnace is so old, you need a new furnace, but otherwise everything else is good. Or perhaps the home inspector has told you something else that is going to cost quite a bit of money. That can really be heartbreaking, especially if you love the house, you've already made an offer, you've already taken measurements, and you are already fallen in love with the idea of living in this space. Well, I have a program that I'm going to be talking about today that fits that exact criteria and can help you get into that home without worrying really too much about having to deal with those costs. Why? Because we can actually add the costs of the new roof or the new furnace or whatever it is to the mortgage. As a matter of fact, even if you're looking at putting in maybe a whole new bathroom renovation, you can do that too and add those costs to the mortgage as well. So it's a program that's meant for clients that are looking to do improvements to their home immediately after taking possession of the property. And the good part is that you're not going to be spending your savings at the end of the day to be getting those improvements done. Essentially, that money will be added to the mortgage. You can actually borrow that additional cash to spruce up your home, make those necessary improvements or whatever it is that you're doing, the roof or the furnace, or to make the bathroom move-in ready. That cost will be rolled in to your mortgage, rolled into one payment, making it easy for you to purchase your home and have your money sitting in as the extra money you have, not having to go through those renovations. So how is this going to work? Let me give you the background on this. First, you need to find the home that you want to purchase. Perhaps you may now, because of this program, look for a home that needs some work. And that's what a lot of people do actually, is they'll work on trying to get a deal on a home that needs some work because they know they can add this to their mortgage. So first, you need to find a home that you'd like to purchase. And like I said, maybe it's going to need a new furnace. You know what? Maybe even needs new floors, or maybe paint, kitchen renovation, whatever it is. Determine exactly what renovations you need and want. And then you move to applying for that purchase plus improvements mortgage. Now you need to talk to your mortgage broker, lender. If you're not using me, then make sure you bring this information to the person you're dealing with. Obviously, I would love to be able to deal with you on your mortgage financing. I work all over Ontario. And if you want to connect with me, my information is just below. But how do you apply for a purchase plus improvements mortgage properly? Well, I'll get right into this right now. First of all, you're going to need to know exactly what the renovations will cost. And you'll need to get a quote from a contractor. And this will need to be a firm quote. When I say firm quote, you don't want the contractor coming back and saying, you know what, next few things have come up and we need to adjust the quote, because the bank's going to want to make sure that it costs exactly what the quote said. So go with a reputable contractor. It's recommended always to get 3 quotes from different contractors so you can gotta get a fair price. If you're not using a contractor, then you can actually do the work yourself. It's a little bit more complicated, but if you're willing to do the legwork, which if you're doing the work yourself, completely possible. If you're willing to do the legwork, you need to get a material list of all the components, material that you will be purchasing from whatever it is, Home Depot, Home Hardware, Timber Mart, 𝗏𝗏𝗄𝗏, whatever it is, that material list, and then supply that to your broker. Okay? So once you get that into the broker or your lender, they will essentially arrange the mortgage. So not only are you getting the mortgage for your home, but you're getting the mortgage for your home plus your improvements. All right. The lender will review your improvements and they'll need to approve those improvements, right? So typically, you can't really do a whole addition with this program because an addition will cost upwards of $100,000 to $200,000. However, with this program, you can borrow up to $40,000. And $40,000 goes a long way. I had actually a few years ago, a client of mine, they renovated their whole basement that they were moving in, that they renovated their whole basement of the home they were moving into. They actually put in a whole second kitchen downstairs, renovated the bathroom, divided the layout, and made it into a secondary living suite. And they were able to add the cost of that to the mortgage. And then they eventually legalized the suite and were able to rent it out and earn some income on that. And when you think about it, if you're getting that money at the mortgage rate, whatever the mortgage rates are, then that's going to be a better rate than a typical credit card, line of credit, store credit card from Home Depot or whatever store credit card you're using. Way better interest on that versus one of those store credit cards. You go through the standard home buying process once you get those renovations approved, and essentially you close on the home, you start the renovations. Typically, you need to get started on the work right away, as the work does need to be completed between 90 to 120 days, depending on the lender. That's between 3 and 4 months. And the lawyer will receive the funds from the mortgage company and will hold those funds until work is complete. And once the renovations are complete, your lender will send someone to evaluate the work and approve it. And then your lender will send the money, will ask the lawyer to send the money to your contractor to pay them for their work. Pretty amazing program. If you're doing the work yourself, you have a couple options there because you need to buy the material. And I always suggest getting a credit card with 6 months, no interest. And then that way you're not being charged interest. And then you are finishing the renovations within 4 months anyway. And you can essentially pay off the credit card with the money that comes in from the bank for the renovations. Make sense? So here's some eligible types of homes you can get this on. You can get this on your first home. You can get this on your second home. You can get this if you're new to Canada. You can get this if you're buying an investment property as well. Pretty amazing. You can get it on a vacation home. You can get it on a secondary home. You can even use this program if you're using a program with the lender where you're borrowing your down payment. So that's pretty amazing news. So that's purchase plus improvements, a purchase plus improvements mortgage, and how that all works, and how to get that done. If you have any questions, make sure you contact me in the information below. Now, let's get into some mortgage statistics, as I always do, on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, episode number 131. All right, so stay tuned now. We're going to go into what typically a mortgage payment looks like right now. And on a $500,000 purchase price with 5% down payment, you're looking at a typical monthly payment of $2,679.40. Down payment on a $500,000 home right now is sitting at $25,000. That's the minimum down payment. What's happening with the bond yield today? Well, the bond yield today is actually sitting at 2.897%. That is it down from last week? It's down from last week. Down about a 0.1%, 0.17% from last week. What's happened in the mortgage market? Well, I've seen lenders send out rate updates and saying that the rates will change, and all of a sudden, rates did change. They have gone down. And because rates have gone down, that's great news for anyone getting a mortgage right now. They can get pre-approved at these lower rates. And when you're getting pre-approved at a lower rate, you're actually qualifying for more money. So that's all good news. Okay, what's happening in the world of inflation? Well, as of February, do we have March statistics yet? Let's see if we have it. Canadian inflation rate. It's currently sitting at 5.2%. We're still looking at February data. March data will come out around the middle of April. The 5.2%, we did peak in June of 2022 at 8.1%, and we've had a pretty steady decline in inflation since June of 2022. Bank of Canada is aiming for a 2% inflation rate. What's happening with the United States inflation rate? Well, right now it's sitting at 6%, a little bit higher than Canada, but still also trending down from their high point, which was 9.1% in June of 2022. So we'll see how that goes. We do have a rate announcement next week on April the 12th. All right, the CDOR rate, where is that sitting at? That right now is the metric I use to determine whether or not buying a home on a variable rate is a competitive option. All right, and that currently is sitting at 5.04%. It's gone up slightly from 5.02, which was last week, making the variance to prime 1.66. A small variance, which indicates that when looking at fixed or variable, you really should consider both options, and that variable is not the clear winner. All right, jobs report. As of February jobs did go up, which does indicate the economy is still strong. What does that mean for interest rates? Well, the economy is doing pretty well, that interest rates will stay where they are and won't go down anytime soon. Prime rate, it's sitting at 6.7% currently. We did last Bank of Canada interest rate announcement, which held rates steady at 6.7%. We have our next Bank of Canada rate update on April the 12th. Will be happening live at 10 a.m. on the button. And what I'll do is I'll be airing a special live pre-rate show and live rate announcement at 10 a.m. Current overnight rate sits at 4.5%. And as mentioned last rate announcement, rates did hold steady. And, you know, my prediction for April the 12th, you know, with inflation trending down in Canada and the CDOR rate trending sideways, that gives strong influence to keeping rates where they are at. 5-year bond yield has been falling, which indicates that rates should stay where they're at or go lower. And the jobs report and average house price are indicating that they are up, which could indicate pressure upwards on the rate. So with all those factors all included and averaged out in my head, I'm thinking that rates will stay where they're at. We'll have to see going forward what happens, but that's what I'm thinking right now. Speaking of average national house price, currently that's sitting at $662,437 as of February 2023. That does represent an 8% increase from the month prior. That's the biggest increase we've seen since the real estate boom during COVID. But still, prices are much lower than the 800,000 plus that we saw in early February 2022. So with the average sold price currently sitting at $662,437, it is up 8%. Could just indicate the spring market, and usually prices do peak in February. However, if you're looking to purchase an average price home in Canada, you're looking at a minimum down payment of $41,241.70. And if you're doing the minimum down payment based on today's interest rates, you're looking at a monthly payment of $3,644.22. Now, if you do want to purchase with 20% down, that does bring down your overall mortgage amount, but it does also increase your down payment. 20% down payment on an average price home today will cost $132,487.40, about $90,000 more than the minimum down payment, bringing your monthly payment down approximately $650 to $2,904.68. It's good information to know because you are saving over $600 there a month by doing 20% down. However, the down payment is considerably more at over $100,000. So, your thoughts? Be interested to see what you guys think if you would do 5% or 20%. Now that house prices have gone up, I do see a lot more people coming into the market because of that. It's funny because people are entering the market when prices go up, but staying out of the market when prices go down. A lot of people did miss out on the bottoming out of the market, which happened just at the end of 2022. All right. So thanks for joining me today on Canadian Mortgage Weekly Live, Canada's only weekly video mortgage news podcast today for April the 6th, 2023. Looking forward to catching you next week for the Canada-wide live interest rate announcement on Wednesday, April 12th. That will happen at 10 a.m. I will be starting my event at around 9:45 with some background as to what's been happening with interest rates and where to expect them to go from here. So if you have any questions, as always, my name is Joe 𝗪𝗏𝗀. I'm an Ontario-wide mortgage broker and looking forward to dealing with your mortgage or helping you get your mortgage through your lender. And my information is just below. And if you have any questions, please reach out to me and we'll see